You actually don't need a complex strategy to be profitable in the Forex market. And some people don't still believe that you can be consistently profitable trading with a simple strategy. Now, many people are still in the Forex trading ICU because they have jumped from one strategy to another and they spend a lot of time looking at their charts, looking at what is not necessary. So what if you can define and redefine your idea about analysis and taking trade with simple strategy? And that is exactly what I'm about to do with you in this video. Let's get into this video and I will show you one of my simplest and easiest strategy. To some people, this is even something you can learn within an hour, how to approach your charts, look at what you're looking for, and then take your trades after getting everything in place. So right here is my screen and I want to show you an example and then we'll do a live trading analysis using this simple trading approach. So here it is. I have this particular location. I want to show you a typical example of how I do take my trades without struggling with my analysis. So coming back right here, you can see this particular area. Let me show you here and here. Now, when you are taking trades, you have to understand the power of top-down analysis. Top-down analysis is simply you taking time to go from the higher time frame down to the lower time frame, especially for those of you who trade intraday. Look at this particular chart, for example. This is on the daily time frame, and then I'm going to show you something I called top-down analysis triads. Here, let me type it for you to see. Top-down analysis triads. All right. This is very easy to understand. It's about how you can navigate different time frames. So here it is. You have the first one where you have the weekly, daily, and the 4-hour. You have the weekly, daily, and the 4-hour. While you have the second one as the daily, 4-hour, that is H4, and the 15 minutes. This is how I do my top-down analysis triads, and then I take trades based on what I have there. So this is for the daily, 4-hour, and the 15 minutes triad. Now you can alternate either 15 minutes or the 1 hour, depending on your personality and how you want to see your charts in a day. There are people that use the 1 hour. As an intraday trader, you can use the 15-minute time frame, also the 1 hour or the 15 minutes time frame. Here it is. I want to show you this particular location. Now look at the progression of price. We have a dealing range, and dealing range is simply where the interest of the traders at that current moment is. Now look at this. If I am on my chart right now, I will look at this area as a swing high, this guy, and this is a swing low, and this is my dealing range within this particular time frame. This is my dealing range, and if you look at this closely, this is a buy side liquidity resting, and this is a sell side liquidity resting at that exact area. Now price had a shifting market structure bearish before moving down to this area. Now every time you see a shifting market structure in the market, just know that a new directional movement is about to start, and that is what shifting market structure comes to establish. Every time you see it, here it is. I have a shifting market structure bearish, and then price started retracing back into the premium area of my dealing range. Now here it is. You pick your Fibonacci tool, take it from here to here. Right at this point, you see price retracing. We have price closing above the buy side. Now we have 1, 2, 3 candle. That is a retracement. Price started moving back to where the premium area. Never take trade from the discount area, no matter how perfect it may be looking. Do not take trade from a discount area if you are going bearish. Here it is. You have premium, discount, and equilibrium here, and right here is where you do the trading decisions, not here. Here is not a good place. So please take note of this so that you don't make this mistake. Many people make this mistake and they end up paying for it. So we have this area being the premium area, but then we have something very, very complex also. We have a fair value gap here. We have another fair value gap here. And most people will be confused. Which of the fair value gaps am I going to pay attention to? And that is why you need to watch this video to the end. Then the second thing is to mark out the entire area where these things are happening. We have a bearish mitigation block here. All right, this is a bearish mitigation block, and that reminds me, for those of you who don't have a copy of my book, quickly get a copy, because these are the things I explain in this book. It's called the Smart Money Accelerator Guide. It helps you to understand the market in such a simple manner. I just try as much as possible to put this material together for those of you to get. It's just about 9 $0.9. You can quickly check the link in the description of this video, make a purchase, and then you'll be able to see where I explain everything I'm explaining to you right here. I just keep it very simple and straightforward so that you guys will have access to it and then be able to interpret your charts like a professional. You don't have to be very complex to make money. Here it is. We are back to your charts. So this area, I call it area of interest. Area of interest. All right, area of interest. Let me edit this. It's area of interest, AOI. So this entire area becomes your area of interest. Why? Because that is where you're going to take your trade and make decisions to go bearish. Here you will see price coming up. Now, how do we know which of these fair value gaps price is going to use? Because we have this, obviously we can see that we have this bearish mitigation block as big as it is. This is the entire area. I don't support the word point of interest because point of interest makes it a specific point, but the area of interest is the entire area under our watch. So here we have a fair value gap and we have another one here. Is it this one or this one? The lower time frame is going to tell us the story. The lower time frame is going to tell us the story. Now we can drop to the 4-hour time frame and look at that area. If we drop to the 4-hour time frame, look at this. We are going to look for a sign of a turn in the direction that price is already moving in. You can see the 4-hour is bullish up until this level, but we cannot just take a sell. All right, that is where the magic is. Now on the 4-hour, because the 4-hour is such a huge time to cover candlesticks, we have just 6 of them, I think, or thereabout, in a day. Now you can decide to go to the 15-minute or the 1-hour. You now see where the triads comes in powerfully. Now if I go to the 1-hour, for example, I will look for a shifting market structure that is visible. You can either go to the 15-minute or the 1-hour. You will see the same thing. All right, now on the 1-hour, we have price what tap into, this is the weekly fair value gap, right? The weekly fair value gap, and it quickly came down and gave you what? A shifting market structure here. That is it. That is the only thing you need. A shifting market structure, bearish. That is to tell you that price is now ready to start facing the downward direction. That is to go bearish. And what do you have? You have a bearish mitigation block and what? A fair value gap. All right. Another fair value gap here. Now, when you have this, you will have to bring in the simplicity of the PD-ARRAY, which I've mentioned in the book. The PD-ARRAY is simply the arrangement of these institutional reference points to help you know which one would price want to use. And that is exactly what we have here. We have a confluence of a fair value gap and a mitigation block. And I would love to use that. Now, for instance, let me ask you a question. Is this not a shifting market structure? This is a shifting market structure. Why didn't we take the trade here? It is simply because price has not reached our area of interest. But now that we have reached the area of interest, we can use this entry and take our trade bearish. Now, you can make your trading decisions and go bearish. Pick your tool, put it right here. Your stop loss should be reasonable, just above the high. And where are you going to target? The sell side liquidity, of course. The sell side liquidity is your ultimate target. And that is like 1:3. That is how I take my trade, as simple as it is. If I get stopped out, it's fine. If I make the money, it's fine. But if you consistently approach your chart like this, you come back and appreciate me. For those of you who have not subscribed yet, go ahead and click on the subscribe button, and also make sure you share this video with your friends and everybody you know that is in the Forex IC or struggling with Forex trading yet. Now, if I go back, you can see how price retraced back and took me in from that exact location. Now, your stop loss is rightly placed, so you don't have to worry yourself about what is happening. Now, you can see price started reacting from that area. All you have to do is to allow trade to behave the way it wants to behave. And let me show you something that I normally do to protect my capital. As price starts moving like this, you will see perfect. Now, just when price moved into this new area, creating a break of structure below this guy, I will simply break even my trade. Most of the time, if I am trading intraday, I'll just break even and then allow trade to move in my direction, because we now have a break of structure bearish and price may most likely not come back to my entry, except if you're using a broker that has such a big spread. All right. So from there, I will expect price to move in my direction. Looking at this, you can see price doing this, and that is going to require patience and discipline. If you are still lacking in patience and discipline, you will make a lot of emotional decisions in the markets, and price will move to your take profit, but then you have to employ confidence. But as it is now, if it were me that was in the trade, when I saw this massive rejection candle, this is probably a news, from here I will have closed and taken my money and I will be gone from the market and come back next time. But then price actually came to take profit at the end of the day, and you can see, let's see how it goes. We are seeing it perfectly. Price went all the way to our take profit. But as I told you, if it was me that was taking this trade at this point, I would have been out of this market from here. You see, this massive shift in structure that came in with momentum, and price actually reacted from this fair value gap and went all the way, and it came down again from there. So that is how I take simple analysis on my charts. Let's go to today's chart, and I want to show you something very, very significant here. Let's go to today's active price action here. This is it. Look at what is happening on the daily time frame. We have price clearing a buy side liquidity. Very, very important. Please don't forget to mark out your areas. And we have a sell side liquidity resting here. We have many of them, but let me mark the ones that we are going to focus on for now. All right. We have one here, sell side liquidity, sell side liquidity. All right. You can see all this sell side liquidity. And another one is this one for this dealing range. So we have a daily time frame dealing range. We have a break of structure bullish right there. And we have price retracing into the discount area here. Now, it is possible that you're going to consider this fair value gap as your area for reversal, but I don't encourage that. Of course, you can carefully wait for price to come down to this fair value gap, and that is the most reliable here, this one. Instead of taking trade from here, why not wait for price to come here before you make your decisions? Now, when price finally comes here, you can drop down to the 15-minute time frame or the 1 hour time frame and take your trade. The same way I do it, price coming into this area of interest and a shift in structure, and then I'll take it back up. And that is how simple my trading strategy and my trading approach is. If you find this video valuable, let me know in the comments, and make sure you also share this video with your friends. Don't forget to subscribe to this YouTube channel. See you next time.